The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 37. We get the Nasdaq up 24. S&Ps are up 4. Gold contracts trading up $3.20 at $1,326 an ounce. We have silver up 8 cents, $19. Oil's down 58 cents, $44.90. We get oil numbers at 10:30 today.
We do.
It's a beautiful thing.
And supposedly they're going to have some glut. There's going to be a lot of oil.
That's what they're saying.
That's what we hear. We'll see what happens.
That's what they're saying. Exactly, man. Notes and bonds, folks. You get the notes bouncing. They're up 13 ticks, 130.13. The 30-year bond is up almost a full point, 166.07. And good old King Dollar is down 135 ticks, 95.51. And no doubt we've had a little volatility, huh?
Friday, Monday, Tuesday. Today's Wednesday. We'll see what happens.
Today's Wednesday. We get option expiration. This Friday, we get our man, Mr. Kevin Hinks from TD Ameritrade. Think or swim. And, of course, don't forget, folks, every trading day right here, 12 to 1 Eastern Standard Time. Kevin Scott have a great show. Swim lessons. You want to understand options upside down, folks? That's the show. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy.
How you doing, man?
Kevin.
You know, for a quiet period for the Fed, this still sure doesn't seem very quiet, does it?
You know what's amazing is that I heard both of you guys yesterday with Basil, right? And I was up in Boston. And, you know, it was amazing, too, that they loaded, you know, that Fed governor came out on Monday, the last deal. And that was, as of yesterday, folks, they can't speak, I guess, until the meeting, right? And I just said that, you know, it's so wild, Kevin. That's what happens in markets, though. It's just like, how does this play out? You know, it's like one person comes out, says, no, it's dovish. And you know what's amazing is that she's always been dovish, though, you know?
Right. Lael Brainerd is historically dovish.
Right.
And the rumor is that she's up for Fed secretary if Hillary Clinton gets elected. So she's got some chips in the game for sure.
Wow. That's wild, man. That's wild. Well, listen, I'm sure that you guys are having a blast because the reality is that...
A little movement, a little action.
And you know what happens, folks? Okay, when you're talking about defined risk, that's what options are, man. I mean, you know, there's so many stories in whether the Wall Street Journal today or the New York Times, folks, in the business section. And what the stories are is that you have all these hedge funds that were claiming forever that they're always going to make money because they have the right trades on because it's non-volatile. And I'm looking, Kevin, this morning, I'm looking at, like, how they leveraged up. I'm saying to myself, like, are these guys, like, 22 years old? I mean, it's like, there's nothing that doesn't get hit once volatility comes in.
Sure.
That's right.
You know?
Yeah, I mean, you know, it's almost like, you know, we used to joke in, you know, the early 2000s and 2000, you know, some of these young traders that are looking at these markets have never seen high volatilities.
Yeah.
Right? And then we almost call it the curse of 1987 because we saw volatility about 150 those days.
Right.
So we always have that in the back of our mind. And we've seen some high volatility. So if you think volatility can't be higher even than it is now, you're wrong. You're really wrong. So things can get crazy and out of whack. And a lot of young people, young traders haven't seen it.
And you know what? If you want to look at the article in the journal today, it's just fabulous, folks, because what the article is about is that how much money they raised, and they leveraged bonds to the hilt again, saying that the bonds are not going to get volatile. That's what they sold, and people bought it. It's like, oh my God.
Wild, yeah.
It is wild. It's like, because we're their bosses too. You know what I mean? But hey, listen, we know that's the business, and that's why we teach people how to trade options, man, because guess what? That defined risk is a whole different ballgame, man.
That's right.
Amazing. So what are we going to talk about today?
Well, as you guys know, yesterday's show we talked about one of my favorite things, which is stock replacement strategies.
Yes.
Now, the second leg of that, we're going to transition into how to roll.
Okay.
So today it's all about rolling strategies, when to do it, how to do it, what are the right times to do it. So today we're talking about rolling.
That's a big one, man.
Yes.
That's a big one.
Yeah, it's an art.
Would you say it's an art?
Yeah.
It's an art form.
It definitely is, man. Because even when I'm rolling, what happens, folks, particularly, like, let's say you have a position that's in the minus, right? You're really looking like, oh, can it go a little bit more? And it's like, no, you better start rolling, man. Do you know what I mean?
Right. If there's one question that we get asked all the time, when do I do that?
Yeah.
When's the right time? Well, it's kind of the, there's the fundamentals of trading, and then there's the artistic part of trading.
Yes.
And you got to learn both, right? And
Yeah.
sometimes that's the difference between a good trader and a great trader.
Yep. No, it's so true. Understanding what is happening at that time and what the time frame is, man. Because the closer that you get, the closer that squeeze can take you on, man. Pretty amazing.
Absolutely, and a lot of it has to do with another thing we teach is knowing your product, knowing what you're trading.
No.
Right? Some underlyings get really liquid near expiration. Some get really illiquid.
Oh, that's
so you've
good to
got to know that and understand that and prepare ahead.
Right. So cool, man.
Yeah.
Right here, folks, 12 noon every trading day. And remember, if you're in your car right now listening, go right in your cell phone, go to tfnn.com. You hit Tiger TV. You're going to get some great HD video as well as audio. And, of course, you can just hit the TD Ameritrade Thinkorswim banner right at TFNN. Get up and get on that platform. Kevin, have a great one, a safe one. Of course, we look forward to the show.
Have a great day, guys.
You stay right there, folks. Tommy and I are coming right back. Right now, you get the Dow up 54. NASDAQ is up 32. S&Ps are up 6.5. We're going right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tom O'Brien, and it's 10:30 on a Wednesday.
We're coming.
It's oil, baby.
We go till 10:27 on the dot. We take a 3-minute break, and we come back right at 10:30 on the dot to make sure we come back for that news. Exactly.
Let's go over to the Nadex platform, folks. And if you haven't test drove the Nadex platform, great time to do it. Come over to our website at TFNN. You're going to see the banner on the top of the side. You can hit the banner, bring it up. They'll put $25,000 of paper money into your account, and then you can trade along with us and take a look at how these defined option contracts trade.
So here's the crude oil contract, the October contract.
Yeah.
Right now we're at about 44.26, and I mean you can see even since about
taking a hit
6
all
in the morning,
right?
It was up at 45.20 right now, and now we're at 44.20, so a whole dollar. So you were looking at the charts. You were thinking about maybe being bullish, right? We've set up both sides and traded volatility, but today we're going to look at just the bullish side of the spread. So we pulled up the 11 a.m. spreads, right? And so if you're bullish, the two we looked at that would probably make sense, looking at the 11s. Now, there's different time frames, but you have one where the floor is $44.
Okay.
So right away, the value is 44.26. So of this, you have about 26 cents in actual intrinsic value, you could call it, but you'd be getting in at 44.43.
Right.
So like 18 cents above that in premium, right? So if you're getting in there, you're paying about $42.
Yep.
And your max profit is 108 if it expires at 45.50.
Right.
Going a little bit higher.
Yes.
Which is you're gonna risk less.
Right.
It's gonna be a little bit higher premium though. Here, the floor starts at 44.75.
Yes.
So you have 50 cents before you have any intrinsic value. This needs to move.
Yeah.
But as a result, right now, you're only risking $11.
Right.
And you know you start getting value at 44.75, and you have value as in you take profits up to 46.25.
And
so I think you like these types of trades. Right?
I do.
Yeah,
I do.
Especially we're talking. These are the 11 a.m.s, and we have news in 11 minutes.
And what I'll show you, folks, I'm gonna put the trade on first.
Sure.
But what I'll show you is that why. So let's do.
All right. How many would you like to do?
By 5. So you're risking.
So buying at 44.86. The $11 is the difference from 44.75 to 44.86.
By 10, actually.
Okay.
Okay. So I got a $1.10 risk. Okay. So if we go, I'm just going to bring up the USO for a second, so I can just show you this just on a short-term basis.
Go ahead.
So what you have now, the USO, folks, is just the ETF structure for it. And what has happened is this: this is coming down. You do have a high volume spike from the September 1st. The high of that is 1027. The low is 995. Now we had 59 million shares there, right? Well, we came down yesterday, big, 38 million, but we're right into that area. And what I'm looking for is this: is that we had a spike last week going up to 1058. So if I go back to the contract, this is what I'd be looking for. Now, this is not a long-term deal, just so you have to absolutely understand this. CLX6. So what I'd be looking for is the same type of spike that you come back into the high-volume bar here from the 9th, right? And I'm saying, hey, you know what? This can spike to 46.41 in a heartbeat right there. So we'll find out.
Yeah, we will.
That's
for sure.
That's we will find out in a few minutes.
No, I mean it's a good. No matter what, it's nice that as we talk about, you have defined risk, right? You have $11 per contract is your all-in risk.
Right. And it's it's pretty cool is that there's been enough bad news out there that we're supposed to have whole bunches of oil, so that the deviant part of it is. Out there also.
Yes.
So it's like, okay. And, of course, we've just come down a $1.25 during the day.
Yes. Like $1.05 at least.
Since this morning, right.
At least right around $1. Yeah. And, I mean, to put it, even just taking a line, that's your break even is right, about here.
Okay.
So in the context of news about to break, that's not that bad.
Oh, you know what's interesting here? Then I should put 5 contracts in to sell to get my money back. That's interesting, right? Why not?
Sure. Well, you know, it depends what you expect.
Yeah.
It depends what you expect, you know. But if you were gonna, let's say, put an order in to sell 5,
Yeah.
where would you?
Well, I got to get back $110 because that's my risk.
Sure. So you got in at 44.86.
Yeah.
You'd be selling it at like 44.97.
Yeah.
Yeah, your max profit 110. That would get you back that.
And then I got to pay for the commissions.
You're right. Let's go for 44.99.
Sure.
Okay.
Yeah. So
so we're putting in to sell 5 of them at $44.99. Now at 99 cents, right? Each one's going to be worth $24.
Right.
Because the floor is $44.75. You're selling at $44.99, 24 cents, $24.
Right. And so the key there, folks, is that, and I like doing this with options periods. You know what I mean? If depending on how many you have.
That's great.
If you can you can get it back quick, then what ends up happening, I can let the rest of them ride because I have my money.
Sure.
You know what I mean? And in option markets in general, you can be in the money and out of the money so quickly, it's pretty amazing.
Especially when, you know, these options expire in 37 minutes. So to put it in that perspective, right?
Seriously.
I mean, yeah.
Seriously.
Yeah, for sure.
Beautiful thing.
Okay.
Our phone number is 877-927-6648. Now, market-wise, folks, bottom line is that these bonds are still dictating the market. You know, bonds are saying that, guess what? Whether the Fed goes up or not in December, the bond market wants higher price, which is not the end of the world, by the way, okay? You know, what does happen, though, is that the market's going to have to get adjusted to that.
Yes.
You know, and
I think that'll take some time, too.
it will take some time because what we don't know, you know, we've had 3 good pullbacks like this in the last, like, 5 years in the bond market, but every single time it comes roaring back and saying, no, you know, lower prices are still coming at us.
Yes.
You know, if we look at the world
You're talking
markets.
about lower prices. You're talking about lower rates. Right?
Lower rates, thank you. High, yes, both. It'd be higher price, lower rates, yes. You know, we're at 1.69 right now in the 10-year. That's still really great. It's fine,
Sure.
You know? And what very well could happen is that we might have, you know, 5 to 6 to 7 weeks of turbulence here, and then all of a sudden the market say, hey, guess what? We can go up a quarter point, a half a point, and that just means that maybe things are okay.
Yeah, and we'll just hang out here for a little while.
Yeah, exactly.
Yeah.
Exactly. So this is going to be wild watching this whole thing shake out. Dollar still wants higher price. So how the dollar trades, it looks to me that between dollar and bonds, it's dictated the markets right now. The SPY actually, now this is what has also happened here. Because of the amount of volatility that we've had this week, depending where we are, this SPY, we had a lower low at some big volume already. It's already Wednesday.
Yeah, it's just Wednesday morning.
Yeah, Wednesday morning. Man.
2 days into the week.
How crazy is that,
No,
right?
for that type of volume, yeah.
Yeah. Well, particularly for the way, and what normally happens is this, the type of moves that we've had the last 3 days, you know, and Larry is the king of this. I remember the first time, whether it's 10, 12 years ago, when volatility comes back in the market, it like just doesn't leave quick. You know what I mean?
Sure.
You get volatility in the market, it stays in, you know, it can stay in 4 weeks, 6 weeks. It can stay in longer, but you're going to be prepared for something like that.
Sure.
You stay right there, folks. Tommy and I are coming right back with these oil numbers, and we'll see where this whole baby goes. Our phone number is 877-927-6648. We're going to be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Come on, there you go. There we go.
Welcome back, folks. So you talk about a cycle market, man, oh man. Tommy and I are just sitting here watching this oil go from, first it hit the 44.70, goes back down to 44 somehow. Not somehow, 44. It's trading at 44.71.
Here we go again. And you were close. You were the live bid. You were the live offer.
Right.
Just
I was?
You were.
Okay.
I was watching it. And it's quick. I mean, you can see how, because, 44.75 is the floor, just to put it over your, so the market's trying to figure out what kind of premium to price on that, even though it's trading at 44.67, there's value. But, yeah.
And if you're actually looking at it, so if you're watching us here, that's pretty cool. You can actually see it up there.
Right.
It says 7 contracts now. 5 of those were mine.
Right. 5 of them are yours.
5 of them are mine, yeah. Yes. So bottom line is that we'll see where this whole thing shakes out. So let's go see what they're saying.
Sure. You can even just minimize that.
Okay. Right there. So CLX6. We got to get that live one, right?
Yeah.
There it is, top live. Okay, so.
Let's see. We're just looking. Inventories.
Rose 500.
Fell. No, that's gas. Fell 559,000 barrels.
Yeah.
Trying to figure out what exactly they don't have the expected.
Crude stocks draw contrary to expectations, with Cushing also drawing beyond expectations. Gasoline stocks build slightly with a larger build in distillates.
Yeah, distillate inventories rose 4.6 million barrels. You can just see on the left here.
Yeah. Crude inventories fell. Yeah.
Let's just see. Yeah, so
we're bouncing.
We are. So I mean, talk about what a 5-minute bar. These are 5-minute bars we're looking at. I mean, from 40. Let's see where we peaked to on a low. 43.94.
Yeah.
Up to 44.79. 44.78. That's an awesome 5-minute bar.
No, I'm getting some good juice here.
You are, yeah.
If we
and you got 27 minutes until your options expire, which is great. And you're really right. You're coming into where your spread has value. And it's like to have $150 of value for $1.50 of movement to the upside, and you only have $11 in risk. That's awesome. And of course, it's nice that inventories fell. We'll try and see maybe perfect. More things are loading up in here. That's what.
Yeah, this Bloomberg Live oil deal is pretty cool.
I wonder what expectations were. Maybe somebody in the den can help us out. Just to see.
I'm just going to pull up USO for a second. Yeah. So I'm going right back to USO, folks. And what I always end up doing is I go.
Those are some awesome bars right there.
It is. And so the USO is saying that guess what? That's going to go to 1041, which would give me what I need. Because it's into the.
Yeah, you're right there. I mean, you're.
Oh, look, we're right there too. Come on, it's got to go over 1037. We're at 1037.
It's climbing, and I bet oil's climbing. We'll just keep jumping back and forth. But yeah, you can see. I mean, so you're 2 pennies right now away from being the live offer.
Okay.
With the spread, of course, but it's now you're 1 penny. I mean, this is where you're right at that level, and realistically, right? So the market right now is trading at 44.90.
Yep.
Essentially.
Right.
You know, you have 15 up, and I wonder if you got any. Nope, you're still live, but you're the live offer right now, and you got about 2 pennies until you'll. Oh, there you go. So
okay,
you got your money back.
So this is cool. So I got my money back, and now.
And now you have 5 contracts.
5 contracts.
And basically, whatever value these contracts would have represent your profit.
Right, which is really cool.
It is really cool. Especially because right now, each one, too, is worth $25, essentially. You know,
right.
the floor is $44.75.
Yeah.
So every 25 cents is $25. Now it's at $30 each one. So that's $155 in value. $175.
Right.
200, 250, right? So,
listen, that's
so hopefully we can say that but it is awesome to look at, and that's, I was saying to you as the news, so what was it, 15 seconds before 10:30,
right?
We saw the spike, and you can see the bar, which is the 5-minute bar before 10:30.
Right.
Whoops. Which is this bar right here, had this quick spike.
Right.
And we could tell in the seconds, though, that the news hadn't come yet. There's still 14 seconds left. And when you're trading these types of short-term instruments, seconds matter.
I mean,
they do. Especially when you're trading them on news, too, because, maybe if you're bearish, right?
Right.
And you see that, you say, oh, the news is out and it's popping.
Right.
In 10 seconds matter to go, wait a second, the news isn't even out yet.
Right.
So no matter what you're going to do, to be aware of whether that's movement from the news or not, to those seconds matters.
And what happens when you're looking at this, the platform, folks, inside where the bid and offer is, you're going to see in the left-hand corner it says expires in 24 minutes and 3 seconds. And that is so accurate, it's unbelievable.
Yeah, and just as long as your internet's working, it's perfect.
Right.
It is. Good.
Hey,
so we'll see what happens.
We'll see where it goes.
You're at about $45. At 45, each one's going to be worth $25 in value. And you got 25 minutes, which is an eternity after the oil numbers come out for that thing to pop around. And when you only have $25 of risk and $125 to the upside, you want some volatility. It's worth the risk when it's all profit.
Right.
Just go set, pop $1 in one way or the other even.
Yeah.
Because if it does that every time, you'll be a huge winner overall.
No. There's no doubt.
Okay.
And then I'm going to run right back to here because
that one obviously with that nice climb got above there.
And now I'm looking at the USO. So let's see. So yeah, I can actually go right back. I want to go back to the actual contract because so the beginning of it we were CLX6. Okay. So what? Oh, that's not even. Doesn't look like it's moving. Why is that? I know why, because that's a delayed quote. That's why I don't use this one.
Okay, right. And I just think that, are you looking at November there? And I think we're looking at on the Nadex exchange. I think it might be October that we're. Yeah, it is. It's the October.
Okay.
That's all. I know what you're saying. That's delayed too. It's delayed too.
Right, but it's crucial.
Right. Yeah. And that's nice. Let's look at that chart again. You're getting another nice climb. every 5 cents, man, is huge. When, you only paid 11 cents. So that's the awesome thing. It's like, everyone's watching oil move 5 pennies like it's nothing. That's what's so great about it. You paid 11 cents, but guess what? You paid 11 cents, but you paid that about 50 cents above the market.
Right.
So that's why you were able to pay that. But it's awesome when you're going to move in your direction.
And what happens is that's when volatility comes in the market, that you can try to take advantage of it.
Yeah,
that's what it comes down to.
You can open yourself up to that exposure when you've locked in, your principal, which is nice. Hopefully they're doing well in the den too. They're trading all the binaries. Jay's jumping around. I almost can't keep track. He's got so many binaries going in there. It is. No, you can see.
When you get used to them,
I saw him posting before like 44.89 binaries for $20. Now 44.89. That's it's 15 cents above that right now, right? So that's going to be worth $60 to $70.
And he's already taken he's taken 2/3 off so far. Now he's going to run a third. Yeah. And that's important, folks, because of the aspect that if you're doing this a lot,
especially when the market was at 44.20 before, he's trading maybe binaries at 44.90. So it's all or none, 70 cents above. You get the 70 cents movement.
Right.
It might not be worth just letting that ride out, because guess what? You get movement, and then if it doesn't tick a few pennies maybe in your direction, you lose it all. So that's where essentially, for sure.
You stay right there. You stay right there. Tommy and I are coming right back, folks. Dow right now is up 87. The Nasdaq's up 42. S&Ps are up 10. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow right now up 72. You get the Nasdaq up 37. S&Ps are up 8. And if we come over to our website at TFNN, folks, you're going to see our man, Mr. Steve Rhodes. He's going to be doing a workshop tonight. It's a beautiful thing. Tonight, September 14th. It's the Mastering Probability. It's for subscribers. You can come into this workshop for only $49, which is a $100 discount. Not just for the workshop tonight, but for you get a full month of the newsletter.
Yeah. He's talking about tonight the ultimate reversal patterns. So you've talked about, he's going to talk about Tom DeMark's TD setup, TD sequential, TD combo, HM Gartley, price relative strength divergent pattern, and just talking about how to manage your trades. And so you get this, of course, you get his money management workshop, and you have access to the archive of the webinar if you can't attend live, if you just want to go over it a second time.
Right.
So that is tonight at 5 o'clock. He'll be following you, your program.
And what happens, folks, okay, what's really cool here is that this is only an hour. And if you had to read those books to go over it, we had a couple questions about how much would I learn inside the TD combo and all that, right? Meaning, what happens visually, it is easier.
I'm sure, definitely.
Okay, and what happens is it's on your page for 30 days, and you would have to go over it. I mean, because...
Sure, you should,
exactly, and that's what's so cool about it,
yeah.
Okay? I remember the first time, that I read it. I've interviewed Tom a few times through the past years, and they're beautiful setups, but you want to go over them. And visually, it's awesome.
Yeah.
You know what I mean? Because it's like anything else, man. We're in a visual
totally,
business.
Man.
We're in a visual business. So, so check it out. You go to the front page of TFNN. You can sign up right now. It's 5 to 6 tonight. Now, if you can't make it, well, guess what? It's archived on your page, too.
And you sign up, you get instant access to, Steve's newsletter archive. You can go in there, see his newsletter this morning from yesterday, and, of course, get tomorrow's and get access to the webinar. And this oil, tell it to cooperate for you, man. That was a nice move, taking your principal off the table, though, because that's quite a turnaround. And
so now we just went from 45.10, and we're at 44.40.
44.35. You're talking about 75 cents of downward movement since you were up there.
Right.
So that illustrates the point quite well.
Yeah.
It does. And, you were saying during the break, right, you could have you thought about maybe taking a couple of the 5 remaining.
Right.
To add some profit to it.
Right.
In the short term, I guess it probably would have been prudent. But after the fact, it's easy. As in, I actually like letting it ride there. Things looked really good. Number one.
Yes.
And you took off your principal, which is great, so you can't lose.
Right.
And I would have expected that to still be a profitable position where you only had about $25 of risk per contract.
Right.
And you had $125 of profit potential per contract, and oil was rocking in your direction. And you had a long time as far as 25 minutes left after oil. So that was my...
And I still got a long time.
You do.
This is what's so cool, folks, about the Nadex product.
These are 5-minute bars.
Right.
So we got 17 minutes left. No, we have. I mean, I'm generalizing.
14 minutes.
No, 14 and a half to put it. So you got 3 of these bars potentially left.
Right.
And look at the last 3 bars that we just got. 1, 2, 3.
Right.
If the next 3 are anything like that, volatility will be on your side.
Right.
So we'll see. Anything's possible when those news come out, and for a good half hour, the market's digesting it.
And what I've found is this, and I know you've heard this a million times, folks. What you don't want to do is you don't want to thinking about how much you're going to make. What you want to be thinking about continually as a trader is that how much can I lose?
Yeah, I said to you during the break, that was awesome. You took off the 5 trades, and that was before this, really.
Right.
I was just saying that was awesome that you did it. Yeah.
What I've found is this. I've found that when you do that, I've done the best when you, because sometimes things will go much further than you realize, and that's when that probability comes in. And it might only be 2 or 3 times a year, but the difference is dramatic.
Yes, for sure.
You know
just
what I mean?
like that, exactly. Where occasionally you're going to get that 125 to the upside.
Right.
I mean, you happen to get, unfortunately, a full dollar to the downside. But guess what? So, like I was saying, there was $1 of movement coming in the next 5 minutes.
Right.
And you only had 25 to the downside and 125 to the upside.
Right.
So that's good in the long run.
No doubt.
Yeah, that's in the long run, you run that scenario enough times, maybe the market continues in your direction enough times to be massively profitable as opposed to taking them off the table.
Right.
Yeah.
Right. Our phone number is 877-927-6648. So let's go over and take a look at the XLE and see what it's doing to the XLE. So
quite a head fake up and down.
Yeah, no, it's cool, man.
Yeah.
So the XLE, this is flat out here. It's up 4 pennies right now at 68.42. And now what the XLE has done, folks, is this. It broke out of a long consolidation of the $68.81. it couldn't handle it. It came back inside it, and this is a problem for the marketplace, man, because these large, oil and gas equities have a large weighting structure still inside the S&P because Exxon and Chevron are so big.
Definitely, and they should. They're just such enormous companies.
Yeah.
There's so much value in them.
Oh, in fact, look at this. I didn't see this because I haven't been here the last couple of days. This is pretty cool. So Exxon actually broke a B point, but not with enough volume. 13 million versus 22. Okay, so let's see what Chevron did. Chevron broke
Close.
it also.
I don't know.
9.7 million.
Did it break it?
9.3. Unreal. No, it didn't. It didn't.
It hasn't gotten below it.
Yeah, and the volume was yesterday. But see, this is building cars, man.
Sure.
They're both building cars to blow out those bottoms. So this volatility is going to continue, and of course, the real kicker is the market today is going to give us quite a bit of information, meaning that right now you're up 87 cents in the SPY. If this baby, you had 32 million shares, and if you do like 125 million, that's not good enough. And then what we do have, which is really cool, is that we have option expiration
Friday, right?
Friday, which is going to keep high volatility in the marketplace. What we did have happen yesterday, which is pretty cool.
I saw this in your newsletter before.
Is that the trend, folks, which is it's the amount of buying and selling that gets done inside the NYSE on the bid or on the offer. And that came in at 2.96 yesterday. Now, that's a high trend reading, but you need more than one. And then simultaneously, the tick came in high. It was a minus 14 something. Let me see, 14. But one day doesn't do it. Yeah, minus 1447. Because what you have to get is you need a few of them within 4 or 5 days, and then you need a rejection of price also. Because what happens is that in the area that we're in right now, we're going to see a lot of these. And, we'll see how the baby shakes out. But it's enough to get it to bounce. But you get the bounce at lighter volume. All that's going to do is set up the next leg down in the marketplace. I can imagine yesterday, man, if I, and I could picture, the acceleration was so big the prior day that people said, oh, no, the bounce. Sure. And then all of a sudden it whacks you again like that. That's pretty intense.
It is.
We haven't seen that in a few years.
Quite a turnaround all over the place.
No, we haven't seen it in a few years. If we look, excuse me, folks, if we look inside the Dow, see the strength versus the weakness.
Yeah, Apple.
Apple's up
huge.
3%.
Yeah.
$3.43. Caterpillar's up 1.2. J.P. Morgan up 0.7. McDonald's up 6 cents. Taken away from it is you have American Express down 0.7. IBM's down 0.5. Hey, how about Wells Fargo, huh?
Yeah.
Is that crazy or what?
It is.
This Wells Fargo story, folks, is pretty intense, man.
It is.
There's
lots of parts of it that are coming out too.
And I guess it's going to come out.
Yeah.
I mean, I'm trying to figure out. You fire 5,000 people, and the CEO is in the head of the. Tommy and I coming right back.
Yeah.
Stay right there.
The head of the unit that's retiring, right? No. We'll be back.
Oh.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Tommy O'Brien, Tom O'Brien, we do appreciate you growling and prowling with us out here. And this market's not digging that down move in oil. You have the Dow right now up 30, the Nasdaq's up 28, S&Ps are up 3.
And let's just take, I mean, that was, nice move taking your principal at least. Because guess what? Not losing money is a different deal than missing profits.
Oh,
Keep that in perspective, too. Missed profits is one thing.
And I got my commissions back, too.
You did. And that extra couple pennies, for sure. Yeah. It matters, because you can really say it as in there's nothing lost, because commissions could add up, for sure. So yeah, quite a turnaround. I mean, pretty remarkable.
We just went from 45.20 to 43.
80. So it's $1.40. It's continuing to just cascade. So we'll see where that ends up. But man, not good for oil.
And that's taking the market down too. And the dollar.
I mean, it has to. That's a $1.50 move, and that's just. I mean, it's amazing. It is $1.50 move in the span of just minutes. Yeah.
And the dollar hasn't gone up yet. So, but if that dollar starts moving too, watch out.
So let's take a look at what we were talking about with Sonia. So this is the story. So the unit's leader, and let's get her name, Carrie Tolsted, maybe. So she's walking away with $125 million in stock and options, and she was the head of their community banking division. Now, this is the one. Consider that in 2014, around the middle of the roughly 5-year period reviewed by, and I think that's whatever this review of the bank, the
financial
regulatory,
Yes.
Wells Fargo set a record in reporting net income of $23 billion on revenue of $84 billion, and her unit accounted for around $14 billion of that year's income.
Wow!
In that year, as in every year from 2011 to 2016 period that they covered in their order, Tolsted collected $5.5 million in stock as her portion of the performance share awarded that's split among the top executives. So put that all together, and how does an executive involved in that division, now, in the same respect as the Fortune piece, this is a big piece in Fortune, they noted she wasn't singled out in their actions.
Yeah.
But, people can make their own decisions. And I think if you go read as much as you can about actually what's going on, you're talking about fractions of $1 billion that she's walking away from a public company that basically looks like, my opinion, would be a total culture of doing those types of things for that many people. It's laughable for the CEO to say that wasn't a culture. There's no way that goes on without it being a culture to the tune of thousands of employees.
Right.
Either that, right? And I've read a lot. Or okay, guess what? Or your bank is too big to even manage. So it's one or the other. It was either implicit, or you can have thousands of employees breaking the law and nobody seems to know. So you choose which one you want, okay? But they don't want neither. And they're going to pretend like it's neither. But it has to be one or the other.
And so we have... Oh, look at how many employees. Oh, my God.
That's the problem.
267,000 employees as of June 30th.
But guess what? That's not a good argument either.
Oh,
I agree. And it could be a valid argument. But guess what? That's a huge argument against more regulation than if you're going to make arguments that you can have thousands of employees breaking the law.
Right.
And you should bear you should bear no responsibility. So guess what? If you don't want that responsibility, then you can't manage the company. That's the admission you're making. But this is its own story in terms of what you think. And so let's just jump through. What were you going to say? There's so many things to cover.
I just wanted to get
she retired 2 months before.
And so CFPB is the Consumer Financial Protection Bureau. And the reason I want to bring this up. The reason I want to bring this up is that what has happened in Congress is that they're trying to get, they couldn't stand it when this came into being.
Of course.
And then they're trying to get rid of it. Yeah. And that's insane, folks, okay? Because the bottom line is that...
Yeah, you have banks literally simultaneously saying that we shouldn't have it, while they're simultaneously saying, we're so big, we don't even know what's going on.
Yeah.
Think about that.
And we don't do anything wrong.
So she retired, that's the end of the show, 2 months before this all broke.
Is it really?
Yeah, it is.
Holy cow. You stay right there, man. Basil Chapman's coming up next.
There we go,
swim
man.
lessons,
Your
Steve
first day
Rhodes.
back. You're raring, ready to go. You'll be back this afternoon.
Thanks, folks.
Thanks, man.
Thanks. Have a great one. Have a safe one.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of tfnn.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting tfnn.com.
This is TFNN.